All right, guys, super quick video on a trade I took. Okay, I took a short right here and I ended up getting liquidated on this move. So I wanted to make this video to explain what I did wrong and also the things that I could have done to anticipate this move and how I could improve. Okay, so yeah, because in the last video I said that I was going to take a trade based off of this supply block here. I was going to take a short, and that's exactly what I ended up doing. I got short right here, but unfortunately the market took my $20. So hopefully this is going to be a learning lesson for myself and also for anybody else that is watching. Okay, so the first thing that I could have done better to prevent me getting liquidated is I could have followed my own rules, in that in the video I said that I was going to set a stop loss above this high right here, and I did not do that. Okay, I got my trade here, I did not set a stop loss, and I did not get stopped out at this move right here, and getting stopped out there would have saved me of the pain of this. So that's the first thing I could have done, is just follow my own rules. Okay, second thing is in hindsight I can see that my entry was not the best. Okay, and the reason why it wasn't the best is not necessarily because of the supply block here. I think that thought process is sound, but more so that my entry coincided with a back test of this trend line right here, which has been acting as support for a very long time. And one thing I've noticed with these trend lines is they can be kind of dangerous. And what I mean by they can be dangerous is they can be deceiving. And what I mean by that is, okay, so this trend line was actually holding up pretty well. You had multiple touches here, another touch here, and then finally you had a breakdown right here. Now, typically when you have these breakdowns of these trend lines, you have a lot of people that end up shorting the bottom here because they think that it's the start of the downtrend. Also, you have a lot of people that end up shorting the back test because they think that this is going to be the start of the downtrend to send the price down. But actually what ends up happening is the shorts that accumulate in here end up being the short fuel to move the market up. And I've seen this happen multiple times. It's exactly what happened here. And unfortunately, I did not recognize that the same thing was playing out, right? Taking a look at some of my notes from the past, okay, as you can see, you have a trend line here. You have a breakdown of the trend line right here, and people end up shorting the bottom because they think that it's the start of the downtrend, but that ends up being short fuel to take out the highs set over here, right? And you have a nice little short squeeze, and this is actually your ideal entry when the short squeeze happens. Okay, here's another example from my notes of the same thing happening. See, you have a trend line here that is holding multiple touches. It looks very reliable. You have a break of the trend line right here and a bearish price action. Okay, you have a lot of people that are shorting this. Look at that. You even get a nice little back test right there. So you have a lot of people thinking that this is going to be the start of the downtrend, but it actually ends up being short fuel to move the market up higher and take out the high. So in hindsight, that is something that I should have been able to recognize because it has happened so many times. But for whatever reason, it just slipped my mind. I didn't even think about it. Okay, so I'm not getting too hard on myself, but it's mostly just a learning process. Another thing is where the price ended up stopping here is also really interesting because it also mitigates this supply block right here. Okay, if I bring this out, this POC right here, and let's change the time frame right here, you can see price just wicked to that before getting rejected. Okay, it didn't actually take out the high right here, it took out, but it did take out these highs. Okay, so anybody that had their stop losses set here got affected by this liquidation event, which is actually kind of cool if you think about it, right? To see how volatile the market can happen. And the reason why this was able to happen, I think, is because you did have an accumulation of shorts that happened right here and an accumulation of shorts that happened right here. I mean, I was a victim of the same thing. I took a short right here and I ended up being fuel for the move up here. Okay, jumping now to the smaller time frames, because the price action itself could have actually been indicative of a move further up. And what I mean by that is, okay, so you had a high set right here, and then right here you take out this high right here. Okay, now the reason why I did not exit my position is because I thought this was the UTAD. I thought this was the start of the move. That would be the downtrend. Okay, but if that had been true, then what we should have seen after this move is we should have seen a break of structure come. Price should have came and at least broken some of the structure here, but that's not actually what ended up happening. Instead, we held above this trend line right here, right? And price consolidated here. So upon seeing the consolidation, that should have been a warning sign to me, like, hey, price is actually not ready to move down yet. In fact, it might actually move up against me, right? And I mean, another thing I could have done is I could have set my stop loss right here. I moved my stop loss to right here because in the grand scheme of things, you only had really 45 minutes to determine whether or not this is going up. And even then, it's probably more so like I don't know, 20 minutes, because after you get a bounce here, you can justify that in your head, like, okay, we're just getting a bounce off this trend line. You know, we're going to come up and probably break through. But then once you get the second bounce and the third bounce, that's when it's like, you really have to be like, oh shit, is the price actually going to go down, right? So I don't know, just something to keep in mind. Another thing that comes to mind too is also understanding where liquidity is in the market, and also understanding where people have their positions, okay? Because there's definitely people that took shorts all throughout here, right? All throughout this period, and understanding where their liquidation levels are. So this is the move required for liquidation. It's an approximation based off the amount of leverage you're using, okay? And you can use this sort of chart to understand, I think, where liquidity lies in the market, right? And even using the volume range right here. What is this called? The fixed volume range profile, right? Okay, so this is hypothetical, yeah. Okay, so this is hypothetical. I'm just kind of thinking out loud, but okay, so most of the volume lies right here. And there's probably there's degens in here that took 100x leverage in here, right? There's also people that took shorts right here, right? Degens that have done 100x leverage, 50x leverage, okay? So where would the market need to move in order to liquidate these people, right? So if they're using 100x leverage, it would be a 1% move, right? So right about there, right? Over here, okay, this is the move that they would need to be liquidated, okay? If they're using 50x leverage, they would need a 2% move, which is right there. And look at that. That actually takes that out perfectly, okay? For right here, where does the market need to go? Right here, okay? So this move was able to wipe out all the shorts and all the liquidity that was caught up in this area too, right? If we look at the range down here, okay, down here, for the people that decided to use 100x leverage down here, okay, a 1% move would have wiped them out. So literally this liquidation wick right here. So literally this wick right here was able to wipe them out. So that's just kind of a hypothetical thing in my mind, but I think that's something I'm going to also start paying attention to, is like, where does the volume lie, and where, if people took out a large amount of leverage, where would the market need to move in order to liquidate them, okay? Because with that sort of pretense, right, I would have been able to understand that, hey, my entry right here is probably not the best, because first of all, we're in a bull market, right? Second of all, we broke this trend line and there's shorts that are being fueled here. And also you have a lot of liquidity here that can be liquidated in the event that we do actually have a short squeeze. So yeah, okay, so that's it for this video. Very short. Hopefully you guys are able to learn from my mistakes so you don't end up making the same mistake I did. And hopefully I will be able to learn from this too. I mean, that's why I'm making this video, to kind of review and to figure out what went wrong. But yeah, I know I will get better in the future. All right, thanks for watching, guys, and I hope you have a nice rest of your day. Peace out.